Alrighty. Alrighty. We are live, are we? We are. Alrighty. Let me bring this up. Let me bring this up to you. Hello, everybody. You guys watching it live, and for those watching the replay, I thought I'd come on and do a live today. Say, hey, what's up to my fellow soldiers? Let's do a live today instead of just doing some videos. Have a good chat with the fellow herds. Maybe I'm walking into a mosh pit right now. I'm doing a live, especially today's environment. Oh, let me get this up to here. Hello, everybody. I'm going to be walking you through today, guys. Just some simple things around these markets that's important to understand. All right. I hope. Is this the? Is this? Let's go to the audio. Just want to make sure that the audio is good for everyone. Where is? I hope I got the right microphone on. Just trying to see. Hey, from Israel. How you doing, my man? I hope you're a male. If not, I apologize. I'm pretty sure you are from the image. That's why I said that. It's like, John, who do you think you're talking to? Anyway, I think the microphone's good. Oh, how do I? Is the microphone good? Is it echoey or is it good? I'm pretty sure I'm using this microphone and not the microphone from the camera. Microphone good. Okay, fantastic. Hello, everybody. Hello. What a crazy environment being in, eh? What a crazy environment we're going to be in. And so what I want to do, the purpose of me doing this live is just to say, hey, in this crazy environment, I thought I'd come on and do a bit of a live stream and say, hello, what's up? And I'm going to walk you through some things, the reason why I saw this correction coming in the markets here and what's going on and so on and so forth in these markets. And then I'm seeing a lot of things out there why people are saying that the stock market's next. The thing about trading is we need to recognize the patterns that's going to give us the probability of that happening. There was a massive probability that we're going to see a really fast correction because we're just too stretched. Even in a very big bull market, if we have a big bull market, but we have a very big bull leg, that's called too stretched, and we need to come back to equilibrium. So that's typically what happens when we have these very big bull markets. Like we're still in a very big bull market right now in gold and silver. Just because we've got this big correction, we're not in a bear market. It's still overall big upward trend. It just went into bubble territory for the last couple of months in gold and silver. That's the reason why we got the correction. It's especially gold. Like gold went from being in a nice, good bull market to just too stretched. That's all it was. And I'll show you some things that helps me guide me down that path there. You shorted silver. Oh, did you? Okay, cool. Yeah, so did I. I bought options, but I'm already out now. That trade's done and dusted because who knows when this thing's going to end, the volatility. So I did short it myself. I did buy put options. And I made 350% return on the trade. but I'm out already. That was the trade for me. So I saw this coming. I did take options myself. I bought put options. So did a lot of my group in my 1% elite group. If you're interested in joining the coaching program, guys, actually no, it's sold out. But if you still want to have a chat with me, you can book a free call with me, guys, and I'll see if I can help you out with with your trading. If you go to getjohnshelp.com, the coaching program's closed, but you still can book a free call with me if you do need some help, and I'll see if I can see what I can do to help you out. Let me bring on the charts here now. And then we'll go from there. So I just want to share some things with you guys. Remember, trading is all about probability, not certainties, right? We're not going to always get it right. We're going to make some things wrong, but there are some things that happen in the market that give us a massive probability of certain things happening. And that's why for the last week, I was so big. If you guys that saw me, right? You guys saw, if you guys that have followed me, even for the last couple of weeks, you saw my post, you saw even my shorts started to get really heavy. Like, I started doing shorts just a couple of days ago saying the greatest crash of 2026 is going to be gold and silver. I just saw this coming because we're in a massive bubble territory. Anyway. But yeah, just so you know, Wiser from Israel. I personally did short it. So did a lot of my 1% group and my elite group. But the trade to me is done and dusted. I got out literally on Friday's close, just before Friday's close, because that was the trade. We're in a very big bull market. We're just too stretched. We needed to come back. We may be ready for another big leg to the upside. So that's the dangerous of trying to short. When you're shorting a bull market like we are now, when you do get it, you need to be in and out fast, because the volatility in this market, it could turn around really, 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 really quickly against you. So I was just looking for the flush down, which we got. And then now for me, again, I'm out. So I got out of that trade plus another trade I was in for about 4 weeks. So I got out of 2 trades on Friday myself. Nice, good increase. So let me bring on the trading view here, and I'll walk through some things that I really just want to help you guys out here, guys, because we know trading is a hard thing, right? Trading is definitely a hard thing. It's not an easy thing. Now it gets easier when we start to just see the patterns and see what's probably going to come down the road and stuff like that. I have a probability of doing certain things. So that's all. John, do you do live trading like on some private channel? No. I do have a private client. I hope is my microphone still working? I hope it is. Testing 1 2. Let me just check. I was like, let me just. How do I? All right, let's do this here. I'm just going to check it once and for all. So the answer to your question, is, do I do live trading like on some private channel? No, I don't do live trading in private channel. I do share with people what I do. My 1% elite group that I have, it's closed now. That I've only got 15 people in that group right now. It's closed. But I do share people what I'm doing. I do share with people some things I'm doing in the markets with that group there. But no, I don't have like a big coaching group or big coaching program with thousands of people in it and so on and so forth, and do all the trading and stuff like that. So no, I don't do any of that sort of stuff. My number one focus is trading. And that's my main focus. And then what I do for a coaching business, I take on a small elite group, 15. I've got 15 people in there roughly now. I might accept a few more later on to get it to about 20 people. That's my main coaching program that I have. And then I shut it down for the year. And then I promote. And then the thing that I have to offer for my coaching program for my business is just like a $4 sale. And there's a couple of upsells with that there, maybe $100, $60, nothing too big. But most of my income comes from trading, and that's what I want to focus on myself. But then my actual coaching principles and my coaching model is always also taking on a real small group of people, and that's my main coaching model. And then I have just a few other things that I normally sell from there, which doesn't really result to much. The $4 sale and stuff like that, just to help people out there. So I hope you understand. Just trying to explain where I'm at from there and what's going on there. So most of my income comes from trading itself, and then I have a small portion of my income that obviously comes from coaching clients. But again, it's just a real small group that I normally take on. Because once you know how to trade the markets, like just recently, and when you see things, you start to, when you really know how to start to trade the markets, you're going to have your losses, you're going to have your profits, but then, you can start to really do really, really well. But it does take a bit of time, and that's what my job is as a coach, is just to help people understand the truth about these markets, not get rich quick schemes and overnight success and all that sort of crap. It just doesn't exist. Okay, cool. All right. So, I just wanted to run down with people that follow me. That's basically what I do as a coaching program. I don't have thousands and thousands of coaching clients. Especially lately, I've been dwindling down my coaching and so on and so forth. Now let's actually go to here. So I want to share some things with you. So even in a very big bull market, right? In a very big bull market, you must understand why I was saying what I was saying around gold and silver for this last week. It's so important to understand this, okay? I want to share something. I want to share one universal principle that works across all markets, and this is this. If you bring up, just say, a weekly chart, we're looking at the S&P 500 here right now, okay? S&P 500, big, beautiful upward move, right? Nice, good upward move from here. As you can see, this is the daily charts, right? And everything's looking quite nicely there, right? Nice from there. One thing that I've learned in this, even in very big bull phases, bull markets, is that the market is like an elastic band. And even in big bull markets, if I bring this up to here, right? So this is my weekly chart here on the S&P. What do you notice about this chart, right? Really simple things is this, is that the market doesn't get too far away below it or above it before it starts to come too overbought or too oversold. It's just universal principles, right? There's this, and whenever we do get too far away too quickly, like a flash crash, like here with the tariff situation or COVID, we typically get a fast rebound back up to it because we've done too much too much movement in a short period of time. So whenever that happens, we're now out of balance. And then the market needs to come back, and it typically reverses. The chart displays so much more. Chris, I think it's Chris. Chris, hey Chris, another Aussie here. Glad I could catch you live again. Oh, fantastic. Hey Chris, have you seen some of my shorts where I've actually showed you my widescreen that my main trading screen? You're looking at the screen now, but I've done my shorts where I've actually showed you my trading layout and so on and so forth. So on those shorts, I've shown the widescreen. And so what I've got now is just what you're looking at now is just one 49-inch widescreen. But that covers, like, the reason why I have that is because, like, I can have a chart to the side of the screen. I mean, I can have just one screen. To the left of me is you guys. Then I've got the chart. And then if I wanted to add like another screen to the right of it and so on and so forth, it's all good. So, but also for me personally, it's Chrissy. I think it's Chris. The thing is, I have just myself, whenever I can see a lot of the chart like here, it gives me a good idea of where we're at in the market. Yep, Chris. Okay, fantastic. So that's the reason why I have a wide screen, because I'm trying to see this here, right? So back to what I was saying before, guys. One of the really big thing that helps with these markets, remember, we never want to go into the market thinking this time is different. All markets work the same way. And there's one universal principle is this. I'm looking at a weekly chart on the S&P 500, and you'll know through years and years and years and years that if we get too far away above it or below it, we're now getting to the extremes where the elastic band's getting stretched. And if that happens fast, we're now getting oversold on the downside. Typically, it happens really, really quickly. Or if it happens fast on the upside, that's now getting into bubble territory. So as you can see all through here, that whenever we do get too far away or too far above it, it's just a universal principle, right? You can see what happens here. So if I bring up, say, even the NASDAQ, right? This is the NASDAQ here. So again, you just see it here. So it's a universal principle. There's not like an exact number, like if it gets 10% away from it, but it's the rough guide, right? It's a rough gauge. So I know this from my trading experience. If it's too far below, we're too oversold, and we're probably going to at least get a bit of a bounce. Now that bounce maybe just be part of the bear market, right? So meaning we may go down too much and get the bounce, but then come back down, and then that creates the lower higher environments from there. So that's what may happen from there. So the one universal principle of me seeing that, I knew that by looking at silver, look at silver here. And this is where this time wasn't different. It was the same thing. Look how far away we are from here. And every time in history, because it's the same thing basically, every time in history when we've gotten too far away from the moving average, we've ended up having, as you can see through here, right? Too far away, the snapback becomes really, really quickly. So yes, we're in a very big bull market here. We still are in a very big bull market in gold and silver. But due to the fact, remember I just said there a minute ago, right? When we get too far below or too far above it, we're too far stretched. And in this case, because we went up and we kept going up and kept going up and kept going up week after week after week. And I'll see if I can bring this up on a candlestick chart for you guys so you can actually see what I'm looking at here. A bit more clearer for you guys. There we go there, right? So a bit more of a candlestick chart for you guys. So due to the fact that we were up here, now this is a weekly chart, remember, a weekly chart. So due to the fact that we were up here hitting the 117, look how far away we are from the moving average. And look how vertical that move was. Those two things, a fast move over many months and gets too far away with very little pullbacks, that is, hey Andrew, hey David, that is now what? That's now getting into bubble territory. And it's too far stretched. And whenever that happens, you're too far away from the moving average, which is the mean. And so therefore, you get this fast snapback. You saw it back here in 2011. Is it? And the same thing through here, right? It's the same thing. All markets work like this, guys. All markets. You just see it time and time and time again. But even for gold, right? Look at gold. Gold was same thing, but gold was actually in a very big, nice, big, beautiful bull market through here. Look at this here. Nice, big, beautiful bull market. It got too far away, then we had a nice, good pullback for a while. Got too far away, got a beautiful pullback for a while. Got too far away, got a beautiful pullback for a while. So this here is a nice, healthy bull market, up for a few months, not too explosive, but just a nice move. And then we have a pullback to the moving average. Nice move again. This is a healthy bull market. Now, then what ended up happening with gold? Gold started to do this, where it just kept going up and up with very little pullbacks. We had a little pullback here, and then it just kept going up again. And so once again, look at the distance. Look at the distance here. And again, like this is all about, there's a major probability of something happening when this happens. Meaning when we get too far away, too stretched, and it's happened fast, this is bubble territory now, right? It's now getting into bubble territory. And whenever that happens, you typically get the fast snapback to get back to some equilibrium because we're too much, right? This is why flash crashes reverse really, really quickly, like the tariff, like COVID, right? Because they go down too quickly and then they get this snapback really quickly. So I'm not calling the complete end of gold and silver right now. No, we're still in a very big bull market overall. All I was saying was, guys, this, and all I was saying through my last week or so, and I'm been getting a lot of people saying, well, John, you called the top on silver at $50. Yeah, I did. And then what did we get? We got this correction here. When we got up to $50, we got a correction here, then it was over. And then as the market started going sideways through here, I did analysis again. We did get a little correction. That's all I was calling for. Just like right now, we're getting ready for a pullback. We've got a pullback. The reason why I'm saying this is most people don't realize, I know when we start to get here, or even up through here on silver, this is when the leverage maniacs come out and they load up 100% of their account. I know. Hey, Reg, Volk fight. Man, I don't know. The Volk fight. I was actually thinking about going to it myself, taking my son. Actually, my two sons. But the Volk fight. You know, I'm a Volk fan through and through. I think his road's coming to an end. Just age. I don't think he's the same fighter he was a couple of years ago. I want him to win. I hope he does win. I just think that I think he's already at his peak, and now he's probably going to start to come down, like Israel Adesanya. Israel Adesanya, he had his peak there for a while. And then he lost the title, then he regained it, and then he lost it again. And then Israel's obviously on the other side of the peak of where he's at. And I believe that's where Volkanovski is slowly on the other side of the peak. Just because of age and then toll and so on and so forth. So yeah, I know. That's where it's hard to say, you know what I mean? It's hard to say. And Reg, I think it's Reg. I think that's who I'm speaking to. Reg, the first fight Volk had with him, that was close. Volk almost lost. So, do you know what I mean? Like, it's going to be a good fight. I'm definitely going to watch it. That's why I'm doing my live stream now, so I can go watch it. So, I hope you can see, like, that's what I'm talking about here, right? So, again, when I'm calling these tops, it's a short-term top in a very big bull market. That's all this big flash crash was just saying what? You know what, guys? Hey, guys, right? Even if you use what's called my 52 moving average, I have a 52 on my daily charts. I use my 24 on my weekly charts and my 52 on my daily charts. It's the same thing. It's a universal principles. And if we know, again, it's not an exact number, but we do know just by looking at the chart, if I put on a 50, well, now why 52? Why not the 50? It's not the magic number. When I first started trading 20 years ago, one of my first earliest mentors, I learned from him, but then I actually went to his mentor that he first learned off, named Simon. So I learned from a guy called Kim, multi-millionaire trader. And then he told me who he originally learned off, that I actually went and learned from him as well. Now, his name's Simon. Simon actually taught me about the 52. Nothing special about the 52. I just learned a lot about it, and I've just stayed with the 52 ever since. But the universal, it could be a 50, right? Doesn't matter. But the universal principle is this. We do know if we're too far away up or below it, and we've already been going in that direction, there's a huge probability we're getting ready for some sort of turning point. Now, the turning point is not a complete bear market crash or complete like, that's it, it's the end of the world for this market. No. What I've been calling is here was just me trying to say the top is getting very, very close before we see a hard and fast snapback. And so that's where, like, yes, I did short silver. And yes, I made a lot of money out of this trade. And I also got another trade. But I'm out now. This is still a very nice, strong bull market. This could just be a flash crash. And the next couple of months, it makes its way back up again. We're still in a very big bull phase here. This one here, it just needed to come back. And same with gold as well too. Like this move up here with gold. So this actually from here to here, this is the actual came down to 50%. That's all that may happen there. And then we end up going back to the upside from here. So that's where it's like, it's really, 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 really risky to try to go down this path of doing that. And the same for gold as well too. Right? This is the gold chart from here. Gold could just be, because we're in this big bull phase, and that's all I was saying. We're getting too bubbly in this move. And especially the silver market once again. The silver market was just crazy, crazy, crazy oversold, or overbought, should I say, from just how far we are away from the moving average. And once again, what I saw, and as you can see, it came down to 50%. Once I saw the 50% drop from there to there, which that's what I was looking for anyway, myself, just to get back to equilibrium, my short position, which, by the way, traders, these trades are about 10, 20% of my trades. And the 80% of my trades are based off my system that I use and so on and so forth. So, again, but we are still in a very strong bull market here. The bull market is trend analysis. Up, higher, low, higher, low, higher, low, up, 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 up. This could come down through to here. It could create another higher low and then continue back up again throughout the entire year. All I was saying was, guys, we are so far extended right now, and I'm hearing the mania, and whenever that happens within the media, or whenever that happens within the industry, that's when stupid things happen. FOMO, let's go leverage up, let's buy short-term options, like this sort of craziness. And then they think they're going to do this short-term movement, and they're going to make a lot of money, and they start to go that down, and then they end up getting their heads handed to them. So just give me a sec, guys. Give me a sec. Alrighty, I'm back, guys. I'm back. So I hope you can see why the people who say that you can't use charts in this environment, that's the big thing is this time is different and charts don't work. I'm showing you technical analysis, how things on a technical analysis, things we can look at that's going to stop you from getting it at the wrong time. And then, unfortunately, you start to get the really big pullback and so on and so forth. So now we've actually got the flash crash at a gold and silver. Again, that's all that it may have done before we start to form a bit of a base. And then we start to make, and then we have another move to the upside. It may do that. I don't think so straight away. I think it's now got another couple of months of just shaking out before and if we do continue up. But right now, there's no major topping patterns within gold and silver right now. It's just we needed to come back. We're just too out of balance from there. Way too out of balance from there. So I revert back to the mean. David, Edward, dude, is calling for a revert back to the mean. That's like 3K on the S&P. Okay, that's a real big guess. Because now I'm going to do the exact same analysis on the stock market. And the stock market is not too overbought. It's not too far away from the moving average. We're in a very big, strong bull market. So those two things are what I've been talking about, why I was calling for a correction out of gold and silver, which is, yes, we're in a very big bull market, but it just got too far stretched in a bubble leg. It needed to come back, and then it may continue back up again now. It may not. I don't know. But that's where I knew there was an opportunity for me to take advantage of it as well too. But by looking at the stock market, I revert back to the mean, which is 3,000. No. Where's he getting that from? There's nothing here on the chart for him to say that. That's a real big guess. So I wouldn't be calling a top in the stock market because there's a massive probability it's going to be wrong. I had a massive probability of being right on a short-term level basis that we're going to get a correction out of gold and silver. Why? Yes, the trend is up. The big bull market is still in play, even in the mining sector. We still got that, but it just got too far stretched, too far away. We just needed to come back. It was in bubble territory. Now we've got the bubble have a correction. We had a real big, hard, fast correction. It needed to happen. Now it may take another few months to shake out, and then it may continue back in and continue this overall big bull market for me. But when I look at the stock market, there's a major trend to the upside. And we're still very, very, very close to the moving average. So we're not too overbought. Hey. So I wouldn't be calling top right now. There's no probability of this actually coming down right now. Now, if the market does start to roll over here and we start to break some lows, then yeah, we could start to talk about downside. But no. These people trying to call tops in stock, and this is where I saw some of the comments. It's so funny. Oh, the comments like, I tell you what. People now think that what happened in gold and silver is going to happen in the stock market. They're different things. They're at different places, right? So, and most people, what you're saying, what you're saying, David, most people are looking for tops right now. But one, we're still in a very big, strong bull market. And two, we're very close to the moving average, meaning the moving average is like a balancing act, right? If we get too far away, we're too far extended, we need to come back to equilibrium. But if we're close to it like we are now, there's still a lot of equilibrium around this level for me. But if we start to get too far away, just like silver did, now you're talking about, now we're getting too far away, we're now getting out of balance. And then if you keep going, now you're getting the bubble territory and you get these hard and fast snapbacks from me. So if you're trading like that and saying we're going to revert back here, there's nothing on this chart to say that. And we just need to keep going with that, right? We need to keep going. Now, the line in the sand for me would be this. If I show you this level here, if the daily chart breaks this low here, I'll do this here. I'll go back to here. Let me bring this down to here. So if the daily chart is still in a very strong upward trend, yes. Big, strong moving average, yes. Too far away, no. So there's a lot of equilibrium here. There's a massive probability this is going to continue. The thing you want to say is that the warning sign will be if we start to break below this 6,000 level. If we break below, break below this 6,500, we break below this level here, which is this point right here. And this point right here. We start to break below that. Yeah, get ready for, because if we come up and we make a higher low and we come back down to make a higher low, but we come up, but then we start to break that low, that's when you typically get a downside here, right? Look at it through here. Up, down, higher, low, up, down, higher, low, up. Look, oh, look, we broke it. And then we had this big selling off through here. So, nah, I wouldn't be calling top of the stock market. There's nothing here to say that. And what I'm utilizing is probability. There was a massive probability we're going to see a fast correction out of gold and silver because it's just too far stretched. That's all it was. That's all it is. Now that's done and dusted. Guess what? It happened. I shorted it. I made a lot of money. I'm out now because it may just continue back up. That's all it was. And so now, again, I want to play the probabilities. There's no certainties in the markets, but I want to play the probabilities. And right now, people are trying to cause something in the stock market, like something like that. We're going to revert back to the mean of 3,000. Maybe, but not right now. And remember, what you're doing right now is only being right. The way that you're doing that, you're only being right 2 times in the last 5 years. Why would you be approaching these markets when you look at the last 5 years? You've only been right 2 times in the last 5 years by trying to do this. Just go with the market. Most of the time it continues. Most of the times continue. And then if we do start to break the trend will start to give us a warning sign. Meaning, look at this through here. Higher low, higher low, higher low, higher low, higher low. Oh, look at this here. When we start to break the lows from here, that bull market is over. Higher low, higher low, higher low, higher low, higher low, higher low. Oh, look, we broke it. So until we actually get this point here, which is this point here, which will be breaking of that point right there, there's zero evidence of us seeing any downside. And there's a massive probability that it would just continue in this upward leg until we start to get that. This here was when, which is what? Higher lows, upward trend, higher low, higher low, higher low. And then, oh, look, oh, we broke it. We're no longer making higher lows. We actually made a lower low. And this is when you get that, or this is when you start to get that from there. Until we get that, any story, thoughts, opinions is coming up with something that is going to be massive probability of being wrong in the markets. I mean, if you're trying to look for a top right now, you're going to be wrong most of the time. Again, I want to trade the probabilities. I want to be right 7, 8 times out of 10. I can't do that when I'm approaching something in a way I can't do that when I'm approaching the market in a way where, it's just not going to work for me. I can't have a successful trading career trading like that. Yes, I'm going to have losses, and yes, there's trades that's not going to work out for me. But if I can do something that I know most of the time, call it 70% of the time, it's going to work in my favor, that's a winning formula. We don't do something that is going to be going against it and so on and so forth. So that's why, for you guys who've seen my videos, I have been bullish the stocky market. It's stocky market. There you go. Ever since we got down to here, I personally bought call options. Again, for you guys who've been following me for 6 months now, you would know this. And then same thing through here. And we're still, look at this here, low, higher low, higher low. So even on a short-term level basis, we're continuing up through here. So risk going against the market right now is not it's not like, oh, well, gold and silver crash, so the stock market's next. You're coming up with a story. I need something in front of me to say there's a probability of this happening. Because remember, how we have a successful year and a successful trading career for many, many, many years is we trade that probability. And if you're trying to do something now, trying to call a major top for 3,000, and you've only been right for a short term, it's just not the right way to go. Just not the right way to go. So, stock market. Is the stock market going to crash? I'm going to say there's a 30% chance, no, 20% chance of that happening. And there's an 80% chance we're just going to continue this very strong bull market. Why? The trend is up. The moving average is still trending up, which is a lot of what's called momentum behind it. And we're not too far away from it, meaning we're not overbought. We're not oversold. We're right near it, which is now equilibrium. There's three major things here. But if we do start to break this level here, then we can start to talk about downside. Until then, play ball with the bull. Just right now, I know there's a lot of people out there getting freaked out because of the volatility in the stock market. The one thing that I really want to teach you guys is this. Most of the stuff that traders are focusing on right now is totally useless to help them actually get good results in trading. Meaning you're focusing on an expert that's going to talk about the fundamentals and the economy and the Fed's backdrop and all this stuff, the inflation, the unemployment, the Great Reset, all this stuff you're using, and then you go to the market to trade. Then you look at the chart, you take a trade, and then within a couple of weeks, if it's not working out for you because the chart's going against you, you then get out for a loss. Like, oh, I need to get out now because it's going against me. That is so out of whack. Like, that's crazy that I see people do this. And so again, if you're a trader of these markets, you only can use trading the market as an active activity. And you can't use the Great Reset to make a trade. Maybe an investment. So that's why I'm still long the stock market now. And I'm up about 25, 30% on my options so far. And that's why I shorted silver. And I made 330% or something. Made a lot of money on Friday, actually. As I said before, I got out of one trade. I'll show you the trade I got out of. So I got out of silver on Friday. And then there's also a trade that I did was actually my trading system trade was FTAI. This big move here. See this big move up here? This is the trade that I got out of. Because this was actually a trading system setup for me. My trading rules. Right? So I got in on this breakout here. Because this is what's called a level 2 trade for me, guys. It's a level 2 trade. If you go to johnsfreegift.com, that's a free book I'm giving away. But with that free book, I'm also giving away a free trading course. And in that trading course is like a 40-minute video walking you through my number one, the trading system that I use when trading the markets. If you want to get ahead, there's a free course book around the mindset and the trading system that I teach you. But I got in there and it went up. One of my actual elite members actually got out with 350%, but I held on just a little bit more and I got out just recently utilizing options for just over 300% return. But this was actually a system trade. It just happened to be on the same day. So I got in on this at the end of last year. And this is what I call the big movers. Right? And this is the way that I trade. Now, again, I'm trying to 300% return. You look at the numbers, a $30,000 trade is what I had on this. 300% return is a $90,000 profit. Like I'm trying to share with you that you don't need a lot of trades throughout the entire year if you do really well. You just got to get really good at what I call the sniper approach. And again, this is what met my what's called level 2 type of trading. And these level 2 trades, when they confirm and they're perfect, they have a massive probability of making a big move for about a couple of weeks to a couple of months. And when they do, you can start to pick up a really big return. Now, this is probably one of the best level 2 trades I've taken in many years, by the way. Meaning, when I got into it, it only stopped for one day and then it just continued up through here. So when you guys see me on YouTube and do the market updates of silver and gold in the stock market, rest assured that 90% of all my trading is done on individual stocks because of my trading plan, my trading setup. Now, this here wasn't a guess. It was just, hey, this is a perfect level 2 trade. Let me take it. Now, what happens if this was a loss? Well, I made 300% here, right? If it's a loss and it went down through there, I probably would have got out for maybe a 30% loss. So if I have $10,000 on the trade and if it's a 30% loss, I was risking 3K. Okay, cool. So 10K on the trade, a 30% loss, roughly 3K. 10K on the trade, and this made 300%. Now the trade made 30K off a 10K trade, but the 30K profit was roughly a $3,000 risk. That's the sort of result that I want. And that's why I swing trade myself, because I can't get that from day trading most of the time or intraday trading. I need to be in trades that's likely to last a couple of weeks to a couple of months to try to get that really big move. And therefore, I can start to get this really big profits. So when I do have my losses, because they do come, I can weather the storm. So if I have a 30K profit from a $10,000 trade and I keep doing $10,000 trades, which I'm a lot higher than that now, but I'm trying to show you, if I had a $100,000 trading account and I only had a $100,000 trading account and I started doing $10,000 trades, this is how I would grow it. By taking 10,000, I would risk small, which is just 2 or 3%, 3K on a $100,000 trading account, by doing 10K. I hope you see the numbers there, right? So if I have a $30,000 profit on, say, on this trade here, just on a 10,000, I could now have I could now have 2 or 3 more losing trades. I could have 3 losing trades in a row, lose 3 trades, roughly say 30%, roughly, call it that, right? Which is 30% of 10K. This is based on, say, a $100,000 trading account. If I did do that and I make 30K on this trade because I let it go for a month, but then say my next 3 trades are losing. Let's just say I do some horrible trading and I lose average of 30% the next 3 trades. 369. That's down $9,000. I'm still up 21K. And I've had 1 profit, 3 losses. I've traded horrible. This is how you win at the game of trading, because you're going to have your losses. That's the nature of the game. And sometimes I'm going to have 7 losses in a row. But how do I make sure at the end of the year, I've had a good year? I need to have this foundation here. So it's not just about jumping on the next big lucky bull market. Professional trading is about what I just said there. And if you can do that, and even and if you can set yourself up like that, where you've had a horrible win-loss ratio, which my win-loss ratio is quite high, by the way. I have a high win-loss ratio. Now we're starting to talk the name of the game of how it all works from there. Then you can start to have a successful trading career. But there's a lot that goes into that, right? It's like, do you even know what you're looking for in a good setup in the first place? Most people not. They're just like, oh, gold's going to the moon. Let's go. So I hope you can see that there. So no, NASDAQ. The NASDAQ is creating a pattern that I like to call the L-shaped trading pattern. What's the L-shaped trading pattern? All right, let me share this here. Whenever the market, check this out. This is going to blow you away. Whenever the market has a weekly chart, has a strong move up, and then spends 3-4 months going sideways, but to the moving average, once we break above these highs, we're probably going to go for a very strong move. It's the upside down L-shaped trading pattern, I call it. but it's the pattern, right? Here's the moving average. Market goes up. Then we start to go sideways here on the weekly chart. But once we actually start to break up above here, media, I'm showing you right now. It's called the L-shaped trading pattern, up and sideways. This is the pattern right here. It's like no such thing as an L-shaped trading pattern. This is the upside down L-shaped trading pattern. It goes up and then sideways. That's what it is there. It's like, what? No such thing. Right. Okay, cool. So the reason why I say that is let me show you why I took FTAI. Oh my goodness. Do you see it now? It went up, then it went sideways. Media, do you see it now? And then we had the break above the highs, and then we had the move. So it was up and then sideways, and then we have the moving average coming up like that, which is a green moving average. Once we do that, and if we start to break up above these highs up here, then we're likely to start to see a nice move up. Look at it through me. So why did I take FTAI? Because it had my L-shaped trading pattern with a strong moving average. That's it. And you guys are complicating it all. And then I made 300% return on this trade. So the hardest thing for traders is they go down this fundamental road. Media, now you want me to help you out. You come onto my live stream, say no such thing as an L-shaped pattern, and I'm teaching it right in front of you, and then you give me shit, and now you want me to help you out? It's the 452-day. Divided by 6 equals a little ingredient to create the secret sauce. Oh, unbelievable. I'm teaching literally a powerful trading pattern. And I'm teaching right in front of him. And then he comes on my live show and gives me shit and then asks me to help him out. So now, as you can see, what I'm telling you right now is not me making something up. Why did this daily chart have such a big move? Because the weekly chart had the pattern. What's going on with the NASDAQ right now? Do you see it? Look at it. So what does that mean? We get in the pattern. That means if we hold here and we start to break up like that, get ready for another big move. If we break here, get ready for another big move. Why? Because it's the L-shaped trading pattern with a strong moving average. It's up and it's sideways and it's strong. I just showed you my trade that I took literally in the last month and why it was such a big profit, because we get the setup there. And whenever we get this pattern forming on the weekly chart, recipe for a good move, not just a couple of days or a couple of weeks, generally just like my FTAI, which I'll go back to here. FTAI. As you can see, typically when we do get these moves, they typically go for a good, they typically can last of the breakout on the daily chart, because as you can see, here's the pattern, up and then sideways. Then that's what I call the L shape, right? It goes up and then it just goes sideways, but it's overall there, and then you have the moving average. The L-shaped pattern. That's why my trading is so successful. And then sometimes it won't work, right? And especially if you then get that and then you start to get the actual breakout bar through there. So see this breakout bar here? Whenever we do get that breakout bar off that sideways pattern, it tells you we're now getting ready for another move to the upside. Call it whatever you want, media. It's like, but it's the pattern that matters the most. It's the pattern For me, my trading is I need a strong bull phase first, then a resting phase, and then we continue up. The breakout is one, but if I'm not. Again, this is for me. So media, mate, you actually sound like you're doing really well as a trader. You should create some videos. I'd love to watch you. So that's why the Nasdaq is doing what the Nasdaq's doing right now. So I hope you can see, guys, that there's a simple trading pattern here that says if the Nasdaq starts to break above its highs through here, guys, get ready for another big strong move to the upside, at least for the next few months. Okay. Most of my videos are not for face video anyway. So anyway, so let me go through some questions here. Do you recommend checking an index or indice before buying a breakout, blast off, ultimate, etc.? If so, what do you look for? Michael, no. Michael, my man. No, don't complicate it. So this is the way we trade, right? For me, I'm going to use my FTAI because this is what I did. For my elite group that I have, again, you can book a call with me if you want at getjohntop.com, and then we can go from there. The coaching program's closed, but if you want to book a call with me and I'll see if I can help you out, then you can still do that at getjohntop.com. But here's what I do. I see the trading pattern. Okay, cool. I get my breakout bar, which is what I'm looking for, off this trading pattern. I then make sure that there's no earnings or news coming out about this within the next couple of weeks at least. And if so, either if there is news, then I don't take it. If there's no news, which there wasn't news on this one, I then take the trade. Simples. I don't need to look at what the indices are doing. Because guess what? Just because the indices are doing something doesn't mean all stocks are doing that. Every single stock, even in the Dow Jones, is doing something completely different than the Dow Jones. You see the Dow Jones here, right? Big move up. But there's a stock called Nike. You may know that. You may know of that stock that's in the Dow Jones. And this is the Nike stock. So you see what I'm saying here? Every single stock is doing its own thing. Therefore, just because the Dow Jones is going up doesn't mean all the stocks are going up from there. So for me, it's very simple. If I get my trading set up on any individual stock, I don't care what stock it is. I don't care what sector it is. As long as there's no major news out about that, and it's not a low penny stock, it's actually a high quality stock with millions of dollars going through it, it's a trade for me. Because I know it's the pattern that gives me a high probability of seeing the move. I take it just like FTAI. I don't care what the rest of the market's doing or what I think it's going to do, because I don't really know what's going to do in the next short term anyway. Then I take it. Because remember, it's the pattern that gives us the high probability of an outcome. Meaning if I get my L-shaped trading pattern, especially on the weekly chart, and we do get the breakout, there's a massive probability we're going to see a nice move off that. The pattern gives me a high probability of seeing the next move. 20% of the time, maybe 30% of the time, it doesn't work out. Then 70, 80% of the time, we're going to get a nice move off that pattern. The pattern says high probability of seeing this move going up. Don't care what it is. Take it, make money. Very, 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 very simple. And that's how, like, you just keep it really simple from there. Just give me a sec, guys. Be back in a minute. Chris, the AI stocks are doing the best in the Dow. AI stocks are doing crap in the last 6 months, man. Most of them anyway. Microsoft down. Netflix down. Netflix getting crushed. Right? I think the only good stock out of this one, we've got Nvidia. Nvidia's still holding strong, but we're probably going to have another leg to the upside soon. It had a bit of a pullback, had a bit of a resting phase. I mean, the market's just going sideways. So we're probably going to hold. We're going to probably continue up from here. Why? Because the trend is up. We're close to the moving average. Don't look at the head and shoulder formation. Don't look at double tops. Don't look at reversal patterns. Go with the market. You're gonna be more successful that way. So therefore, we're probably going to break up and go for another move to the upside soon. Meta had a big gap up just recently. Meta's done nothing here. The only probably the best stock out of the AI sector is Google. So AI stocks have been doing pretty crap lately, actually. And now Google is in the same boat, very close to the same boat as what silver was doing. Meaning Google has now what? Has had a very big, strong move to the upside with no pullbacks. That means we're probably getting ready very close to having a bit of a pullback here on this weekly chart. Because remember, a bull market is what? Higher lows, right? That there is not a bull market. That's a bull market, higher lows. So I would say we're getting very, very close to have a bit of a short-term correction soon. Not an end of trend or topping pattern. We just had too much movement to the upside. We're probably going to go through a bit of a cooling off phase. ARCROC, I think it is. Going along. Hi, John. If the S&P blast off, will this put further pressure on the metals? Thanks for your yellow. Very helpful. Sugar McElroy. I hope you're around. Hope you're still around. If not, there's a big question mark around that, right? They're not correlated. So I wouldn't even focus on that. Right? There's no correlation between what the stock market's doing and what gold and silver are doing. There's no correlation there. So focus on the stock market only. Meaning if the stock market's going to make a move up, gold and silver can go up as well too. They may not do much. Like you see what I'm saying, there's a very big question mark around that. Like, who knows? I think gold and silver are probably gold and silver are going to create a lot of volatility for the next couple of months at least. Not strong moves. We're not going to hold here and then go straight back up again. We're probably going to go through a bit of a consolidation phase first, and then it may continue up. So that's all I'd say from there. Don't complicate it. If just look at the stock market or the S&P, if you're looking at the S&P 500, which is this one here. And if you think the trend is up, so on and so forth, so just go with that. Go with whatever this chart is telling you. But my thinking is that you may be in the metals and thinking, oh, if the market goes up, then it's going to put more pressure on the metals. It may. I'm not sure. Big question mark around that, though. Crypto is crashing. Yes, crypto is going down. If you've been watching my YouTube videos, what have I been saying on my market update, guys? I've been saying through this bit through here, this is what Bitcoin's doing now. So get ready for another move to the downside. So I've been saying that in my market updates as well. And this is the Bitcoin market. But we're at this point right now, so we may be getting ready for this may be a flush down before we fake out. Meaning That's that level there, and that's the level down there. So the good old Bitcoin. Yeah, we still have a little bit more downside to go, I think, but I don't think it's gonna. Yeah, meaning we're just, the thing is, what I'm looking at here is typically when we have these movements, we have a little pullback and then we drop. That's a bit of a short-term fake out, so we typically get that. We may have a bit more drop to the downside, and then get a reversal, and then it may continue down from there. Oh yes, Michael, I just saw your comment there about. Thanks, John. Your explanation makes sense. Excellent point about avoiding those. The reason why is, remember, Michael, trading is all about it's all about probability, right? If I'm getting into a trade and something's going to give me I'm not sure how this is going to affect the trade, 50-50 toss a coin, I can't be involved with that. But if I'm going to get into something where I'm going to have 70-80% probability of the outcome happening in my favor, now I can work with that. I can have my losses. I can have my, you know what I'm saying, Michael? This is the plan. This is the foundation of having a good year this year, not just being lucky on one trade or one big bull market. We want to be professional about how we approach the year. So if I'm going to get into a trade that gives me at least a 70% success rate, 70-80% success rate of seeing the next move, but then there's earnings, that earnings then creates, like, who cares about the pattern? Because the earnings should then shatter it and then do something completely different. So therefore, I don't take it. I want to make sure that this year I have a really good year this year. Therefore, guess what? When you start to do that, that's when you can start to have a trading career out of this and start to do really well and not then have it to work and so on and so forth. And you can start to pick up some good trades. So that's all it is. Bitcoin down to 50K. That's a big guess. Maybe. Going long gold and silver. Cool. We're still in a very big bull market. By the way, guys, FYI, I'm in gold. I'm long gold and silver in the mining sector. From an investment point of view, people still just, I think some people just don't understand this. I have been buying gold, silver, and the mining stocks since 2020, 2021. And I was underwater and it not doing nothing for many years. So this big move up in gold, silver, and the mining sector we've been experiencing the last couple of years, I'm in it from an investment point of view. Investing is not get out of the top and then buy it back again. No, investing is going through these swings. Why? Because in the next 5 years, I see gold being $10,000 plus, $15,000. So that's an investment. That's a completely different approach. Investment is not, oh my goodness, it's too far overboard. It's going to correct 20%. I better get out and then buy it back. And no, now we're talking different mentality. So I'm long the metals and miners, have been for many years. and even with this pullback right now, I will still be long for many years. Why? Come to me in early 2030. And the mining stocks is in a massive rampant bull phase, higher lows, big bull market. Silver, I'm not sure. Gold, $15,000 plus. That's my investment portfolio. But investment portfolio is not getting in and getting out. It's going through the swings that this market is going to give you. Thank you, John, watching from Japan. I could sold 60% of silver and gold position thanks to you one day before the big drop. You're very successful. Control my greed. Yeah, but just understand this point of view, right? Just understand what I was doing there. This is short-term movements. Technical analysis, short-term movements, what's likely to come over the next few months. Who knows? Gold could bottom here and then make its way back up to 7,000 over the next 1 year. That's all I was saying. It's a short-term movement. In a very big long-term bull phase, even with a big 30% correction out of gold, it's still massively bullish long-term. We just need a bit of a correction out of it. That's all it is. So from an investment point of view, I wouldn't be buying and selling gold like, oh, let me sell it here and let me buy it back cheaper and all that sort of stuff. No, if you're a long-term, if you believe in the metals and miners, which I do believe long-term, then don't be selling and buying and selling, buying and selling through these swings and pullbacks. You're not that smart. I'm not that smart. Just hold it and go through the swings. Robin Bank trades. NVIDIA, yes. Yeah, I was talking about NVIDIA before, yeah. So NVIDIA is probably going to hold and continue up from now. See, there's two different types of traders right now, right? Like, look at NVIDIA. There is trader A. Right, so this is trader A. This is weekly chart to the left. Trader A says, John, you don't see it. There's a massive head and shoulder forming right now. It's going to crash. Oh my goodness. There's trader A, or there's trader B that says, we're in a very strong big bull market through here, and the moving average is still trending up right now. So the trend is still up, lower, higher, low, higher, low, higher, low through here. And the moving average is going up. We're still in a very big, strong bull phase through here. It's just gone through a quiet phase. It's probably going to continue. I'm telling you right now, trader A will be wrong at least 7 times out of 10. Trader B will be right at least 7 times out of 10. Trader B. And that's where right now, the same analysis applies to the stock market. You could be right. You're calling top right now, cool. If you do get it right, you know your success rate is only about 20, maybe 30%. Good job having a long-term successful trading career on that success rate. Don't make life hard for yourself. Trade away where it's going to work out most of the time. And some of those times you're going to have big profits. Rinse, recycle, repeat. Have a good year. Don't try to make life hard for yourself and have a big guess. Like, oh. People just make life hard for themselves. Oh, I want to have a big guess. Let's have a big guess. That's why 90% of traders don't make money out of the markets. They may make money short term by being lucky on a big bull market, but being professional and actually being part of the 1% who actually do really well long term, not just in a big bull market phase, that's the situation that you need to be. So media says, so you don't think we gap down on Monday? It may. It may gap down on Monday. But media, what does that mean? Nothing. It gapped down recently, and then it went straight back up to all-time new highs. Even if we do gap down, it could just be a short-term little gap and before it runs again. 4 trillion vanished in tech and metals plus CME hiking margins. Aren't we looking at a big liquidity trap leading into forced liquidation? Those last two little things you put on there is exactly right. Who knows? There's a big story around that. Question mark, question mark. Who knows? And if I did say something, it'd be me making up a story, which is probably not going to be true anyway. What is that? I think that's cool. Yes, itching for a breakout. Dumpster diving on Oracle. Yeah, definitely. So that's why I really want you guys to be focusing on, like, I hope you can see, like, for you guys to be around long term in these markets, guys, we need to start trading this from an actual like a systematic approach. And not just having big guesses about, oh, the great reset's coming, so I'm putting all my eggs in gold. Like, that's not the way to go for anyone that's trading the markets. If you're an active trader, it's just not going to work that way. But the good old silver, absolute complete meltdown, eh? Unfortunately, this here, I actually made a lot of money on this one because I shorted, I bought put options. And why did I buy put options? I gave you guys all the reasons in my last few updates, right? About the market and the volume spike and the exhaustion. It's all the same thing over and over again, right? But now I'm out of my put options though, because this is all that she could write before she heads back up again. So that's what it's all about, guys. But it's going to be a one crazy. And all I say is, for you guys that are chasing FOMO, like if you guys that, all right, this is the year that's really going to show who has been lucky in the markets and who really knows how to trade the markets properly. Meaning, this year already, the last probably 12 months has already done that. It's exposed the crypto lucky guys, the Bitcoin and Ethereum, right? For those who were lucky in the very big bull market, and they were so-called experts and knew what they're talking about, are getting their pants handed to them right now, right? Because they were in it and they were lucky in that bull phase. So again, anyone that's trading the markets who has been just lucky on these big bull markets and not an actual professional around how to have a long-term trading approach, man, cryptocurrencies down, the AI stocks have been getting crushed, silver, gold, big crash from here. All of this big volatility is doing one thing. It's exposing the lucky. And for me, because I trade this from an actual trading point of view, let me get the probability, let me have a good risk, a high win-loss ratio, let me have a small risk and big profits, all that sort of stuff, and I trade that way. I'm not hurt by this. In fact, I had an amazing year last year and the year before, and I'm already starting off a really good year this year. I've already just closed my first two trades this year. One was silver, and the other one was that trade that I talked about in the earlier session today. So that's what this year is going to continue to do. It's going to continue to expose those who have actually put in the work behind the scenes to becoming really good at trading. Like, do you have a plan of attack of approaching these markets? Or are you opening up the chart and going with the wind? Because unfortunately, the wind is going to blow you one way, and there's going to be another way, and there's going to be another way, and it's going to be another way, and you're going to be like completely washed out. And unfortunately, I know most traders in the last couple of months would have done that with silver or through here, especially this big move through here, thinking it was just going to go up. And I know the leverage and the people who are getting involved with these markets just getting destroyed. And it's just not the right way to go about it. It's just not the right way to go about it, guys. And that's where, like, when it comes to my coaching program, I have at getjohntop.com. It's closed, but if you want to book a call with me, I'm still happy to talk to you and see if I can help you out. But I'm all about, me as a coach, me as a trader, is how do I help you protect your account so you can have these small risk? How do I help you have a good year this year? And how do I set you up so for the rest of your life you can have success for years, even though you might have a period of a few losing trades in a row? Once you have that as a foundational approach, you start to crush it as and 90% of traders out there don't make money because guess what? Oh my goodness, silver's going to 200 because it's taken off. I better get in now. And then they get washed away. I know, guys. I've already been seeing it. I've been speaking to some people lately. I know one person right now has lost over $500,000 in the last couple of months. So because they just are going, they're doing everything the wrong. They're going against big bull markets. They're buying after of a bubble period and so on and so forth. They're leveraging up. I have a job, have a family. It's hard to keep up. Chris, I disagree, man. You're trying to keep up with all the news, with all the reports and all the videos out there of why something's happening. Which is, by the way, all that stuff I just said there is a made-up story. Why did gold crash? Why did silver go down? Because of liquidation and da. Cool. Okay, that may be true. Now what? And where you can have a job, have a family. By the way, Chris, all my trading is done within an hour or two per day. That's all I need to make sure I'm staying on top of the markets, taking good trades, managing, and that's it. Because I don't spend all my time on stuff that may or may not be true. It's just a made-up story and opinion. And even when I do find out about all these opinions that I've just spent hours and hours and hours trying to figure out, like why did silver go down? Why did silver crash? And you spend 4 hours listening to YouTube videos and all this sort of stuff. And then you find all these opinions and then you make up your mind. Oh, silver went down because there was this great liquidation and all. Oh, okay, cool. So you spent 4 hours to figure that out. Amazing. Is it true? Maybe. But let's just say it is true. Now what? Now what? What do you do with that information now to make a good decision tomorrow? You can't. And that's the problem. We're spending so much time on useless crap that's actually not going to help us make a good decision tomorrow in the markets. It's about this current event. So it's hard to keep up because you're focused on all these opinions. And even if I told you, like, I don't know why silver went down, the chart is a very simple thing that says if we've been vertical for many months and we get too far away from my moving average on the weekly chart, that's now called bubble territory. And within that, you start to get these hard and fast snapbacks. The end. There's a massive probability of that happening. I can trade that. But if I listen to a guru for 80 minutes on the fundamentals and the commitment traders report and this and that and the great reset and traders are fearful and okay. I can't make a decision on that within that. And so all these people are spending all these hours and 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 hours doing that when they should be just using simple things. Now, the thing about what I do know as a trader now after 20 years is guess what? Most people think like, John, you're full of shit. It can't be that easy. Like, look at the moving average. It's too far away. We're probably going to crash. No, silver went down because of, and then they insert these reasons. Okay, cool. But the chart actually said it here. And then guess what? And then they try to be smart. Then they try to be like, come up with another story. and then they end up losing money long term. So once you know the most important things to focus on, and all this other stuff we can just waste hours on, it's just useless. Once again, if you started going down the rabbit hole of trying to figure out why gold and silver crashed, who knows? It's all a story, all an opinion anyway. But at the end of the day, the bottom line is, even if you did figure out why it actually went down, how is that going to help you identify a good trade tomorrow to make money? It doesn't. So you just spend 4, 5, 6 hours going down this rabbit hole, trying to figure out what's going on, and you found it, but now tomorrow you're back to a new, trying to figure out where's the next good opportunity to trade. And now you're down another rabbit hole. And again and again and again. Where with me, I use the chart, and the chart says, hey, 5 minutes. The market's been going up for many, many, many months in a row. It's completely vertical. It's hockey stick. It's too far away from the moving average. Worst time to buy this, and we're probably going to see a correction. My 10 minutes work is done. I don't need 4 hours of crap and opinions to tell me what's likely to come next week. Because guess what? Most people are going to be wrong anyway. like they've been wrong. The herdman. And this is where the issue with that though is whenever something's hot, I know you guys saw it all the gold and silver bugs come out. Even Peter's shift was on fire there for a while. Every day, oh my goodness, it's up 100 points. It's up this Peter's shift, and then the market crashes. So if you want to be a professional trader, you need a plan of attack, not a hope. Well, I heard the story and I hope this is going to work out. Or are you going to trade the market because this is the trading plan? This is the trading setup. This is how you trade the market every day. At least 80% of the time, and 20% of the time you do these other type of trades. If you're not doing that, you're a big fat gambler and you're going to lose all your money. So anyway, guys, that's it for me today. I'm out of here. There's your live stream for the weekend, guys. Listen to the markets. Don't listen to opinions. No, if I come up with an opinion, it's just an opinion anyway. Who knows it says it's true? The only thing you can rely on is what the market is actually doing. And once you do that, you can start to do really well. See you guys.